The average house in Sydney is now worth almost 2 million New Zealand dollars. Property prices in this city are up 24% in just the last year. Meanwhile, in New Zealand, house prices are still stuck. They're 15% below the peak. Our largest city is down over 20%. But if Australian house prices boom, does that mean New Zealand's next? Well, in this episode, we're going to start by breaking down exactly what's driving Australia's skyrocketing house prices. And then once we look at the data to see if New Zealand really does always follow our larger cousins, then you will finally know if the Kiwi housing market is next in line for a boom.
Now, the amazing thing is the median house price in Sydney did just hit about 2 million New Zealand dollars, or just under 2 million New Zealand dollars, about 1.6 million Australian for a house in Sydney. The overall price is 1.3 million Australian dollars. That would be about, I'm just calculating it in my head, it'd be about 1.5 mil New Zealand. Just over, actually.
That's pretty crazy.
Isn't that insane?
That's pretty crazy.
And the amazing thing is the Australian property market really is booming. One city I'll tell you about in a moment is up 24%. Brisbane and Adelaide, they are at record highs. Meanwhile, over here in New Zealand, our house prices are still about 15% below their 2021 peak. Auckland is down over 20%. But one question I was thinking is, if Australian house prices boom, does that mean that New Zealand is next? But just before we dive into that, and we do have the data for it, what's going on across the Tasman, Andrew? Why is it that Australian house prices really are booming?
So the national median house price hit 933,000 Australian dollars in 2026. Now, it's up about 10% year on year. Sydney's median house price, as we said before, is about 1.6 million Australian dollars. Perth led the country with 24% annual growth rate. That's crazy, right? Like if we think our average is, let's just call it 5. There's basically 5 years worth of growth in a single year like that. That's pretty massive for them. Brisbane's up 19%, Adelaide 11.4%. And these are extraordinary numbers. Now, just remember, that will tend to average out. So you might have some years of lower growth now. Maybe you'll have a bit of a plateau. Maybe you'll have a pullback. But these are obscenely large numbers at the moment. If you bought a property in Perth a year ago for $800,000, it would be worth over $1 million today, potentially.
And the interesting thing is that this is not a 1 year off fluke. If we look at Australian house prices, they have been recovering really well since the bottom of the market at the start of 2023. And we have seen a relatively steady recovery in Australian house prices. So why are the Aussies' house prices going up while we are going flat?
So I think one of the interesting things to think about, first of all, is what happened during the COVID times. So in Australia, it was kind of a little bit like Queenstown, right? There wasn't a whole lot of growth, that post-COVID boom that we all had, like in Auckland and Wellington and Christchurch, that kind of thing. And so as a result, you kind of didn't have that same drop and then that massive correction. So they've just kind of gone through, yes, they did have a drop, but because they didn't have this massive boom, the drop was lower and then the correction upwards happened a bit sooner.
Well, they did still have a boom, right? Their house prices went up 22%, which is a lot, but ours went up like over 40%. Now, Ours went up 42%. Theirs went up 22%, which is a lot, but not as much. And so that's why our house prices dropped about 18%. Theirs dropped only, I say that in quotation marks, about 12%. So they didn't have as big of a boom, so they didn't have as big of a drop. And then I kind of think like they've kept, I'm going to use a really dumb phrase, but they've kept a bit of their powder dry, right? Or because they didn't have the same massive boom, it's still got some gas in the tank, if I can say. That's why we've started to see a bit more of a recovery compared to ours, where we've basically exhausted all the fuel and now we're just going sideways, or at least that's what it's been for the last 2.5 years.
And then if you think about kind of one of the other drivers of demand and therefore property growth, typically is that comes to immigration. And so in Australia, the Australians added 306,000 net migrants from 24 to 25. And at one point, migration added over 550,000 people to their population. Now, that's a huge number, but bear in mind they have a large population and they've got a bigger country. So at the peak, their migration was adding 2% to their population per year. Now it's kind of closer to 1%. Now, we also got up to 2%, but nowadays our net migration is kind of adding about 0.5% per year to the population. So, so whilst we've had some of those positive numbers, it hasn't been as massive as the impact to Australia.
And then I suppose the other thing is their economic trajectory, right? Like their unemployment rate's currently lower than ours, isn't it?
Yeah, so at the moment, their unemployment rate is 4.3%. New Zealand's 5.4%, and it's still rising. And if you think about kind of like how they're making their money, Australia exports energy. New Zealand, we import ours. So the oil shock has kind of hit us harder right now. Now, that might change moving forward for them because if you think about it, okay, well, we know that their fuel, their number of days of fuel available is much lower, and they probably exhaust it a lot faster because it's a geographically large country compared to New Zealand. So I think that might change in time. But at the moment, you know, it's really impacting us more than it is them.
So one question I really wanted to answer was, does New Zealand always follow Australia then? Like, should we expect a boom because their house prices have gone up? Now, I went looking for research and the best I could find came from about 7 years ago in 2018. And what they found was there has historically been a link. So ASB's economist at the time, Mark Smith, he's actually still there, said that New Zealand house prices have tended to broadly track those in Australia, showing, you know, similar supply and demand things going on at the same time. But there is about a 6 to 9 month lag. So if Australian property prices start going up, there's a bit of a lag before we start seeing similar things happen. But again, as I told you, that research is quite old, like 7 years old. So I went through, I updated the numbers, and what I found is that there is a bit of a trend, right, where New Zealand and Australian house prices have tended to follow a similar pattern where when Australian house prices go up, we see ours go up. When theirs go down, we also see an amount of decrease as well. And then just like them, we've seen a bit of a recovery. But what's important to understand is, like, if I look at, say, 2019, before COVID times, Australia was going through a bit of a downturn, right? House prices fell at 7.4%. Now, we saw a quietening down of our market, right? Where instead of going up by 12%, our house prices were going up by like maybe 2, 3, 4%. But we didn't see the same negativity. So what I'm trying to say here is it's not like if Australia sees a boom of 10% per year, that doesn't mean we're going to get 10% per year. It might just mean that we're going to see house prices not fall as much. It might mean that they go up by a little bit more than they had been, but it's not like we're going to see exactly. But when you look at that, Andrew, and I know in front of you and people listening to the podcast won't be able to see this, but there does seem to be a bit of a trend in terms of when they see a bit of an increase, we see a little bit of an increase too, right?
It's actually much more closely correlated than I would have imagined. One question I'd ask you, Ed. So in New Zealand, I know that we've spoken before about on election year, you have 10% fewer buyers before the election, 10% more after, but that doesn't really affect the trajectory that you're on. Does the Australian political system, is it timed similar to ours?
In terms of when they have their elections? Short answer, it doesn't line up. But remember, our research showed that elections don't have that much of an impact on house prices.
Yes.
They have an impact on sales volumes.
Yes.
And here we're specifically talking about house prices. The other interesting thing from my number crunching is it goes the other way as well. So while looking at Australian house prices can help you understand what's going to go on in New Zealand, looking at what's happening to New Zealand house prices can also help you predict what's going on in Australia. So it goes both ways as well. And again, I think that's probably what the ASB economists were saying, is that it's more that we are impacted by the same supply and demand and international events and what's happening with interest rates, as opposed to whatever happens in Australia, that's what's going to happen in New Zealand.
Yeah, well, I kind of think, okay, well, if you think about the fact that most of our banks are owned by the Aussies, and probably if they're having a major change to some of their appetite for lending, so if you think about the Royal Commission inquiry into banking, how many years ago it was, 4 or 5 years ago, that had a major impact on the way banks lend, and that flows through to New Zealand banks. And so if then all of a sudden it's a bit harder to get lending and they're more nervous about banks giving money out for guaranteed loans and all those kind of things and co-borrowers, if that impacts New Zealand and we can't borrow as much money, that decreases the demand.
Oh, that's true as well. Now, if looking at Australian house prices isn't going to perfectly predict what's going to happen in New Zealand, what should we be looking at instead? And I think one important thing to look at is what is happening to the number of property sales in New Zealand at the moment. And this is something that I feel like media commentators don't talk about enough. When they talk about the downturn, often we're talking about a downturn in terms of property prices, which is a totally fair thing to discuss, right? But if we're talking about the property market in general, not only should we be talking about property prices, we should also be talking about sales. And the truth of the matter is we have had almost a full recovery in terms of the number of properties selling per year. At the absolute bottom of the market, only about 59,000 properties were selling in New Zealand per year. We're now up to just under 80,000. The long-term average has been about 82,000 properties per year, but that puts us back at around that 2019 level, right? Like we are currently transacting more properties today, or at least we have over the last 12 months, compared to what we did before we saw that massive COVID boom and people started buying more and more properties. So at least from a sales volume perspective, we have seen that sort of recovery. That is a good sign. The other thing to look at, I think, just like the Australians, is net migration. And one thing that I think a lot of people are not paying enough attention to is that our net migration, while it has gone down from about 130,000 at the peak, which is the highest it had ever been. Yep, it dropped down to about, kind of 11,000, just under 11,000. We've seen a bit of a recovery. The latest numbers have us at about 23,000 into net migration. Now, again, that is below. We might have actually, like literally when we're recording this, did we get a new release this morning? Oh, Andrew, we got a new release this morning. We just got it, and we've seen an even bigger recovery, up to 25,000 over the last 12 months.
You heard it here first.
So that is still underneath the long-term average, which is about 33,000, right? But we've seen an extra 15,000 people, or net migration has added an extra 15,000 people compared to 6 months ago when we were all extraordinarily worried about that. And that's driven by two things. And I'll zoom in for this graph, Andrew, realizing that people on the podcast can't hear this. But we have started to see fewer Kiwis, and it's a small thing, but fewer Kiwis move overseas. We've started to see that drop off by a little bit. On the other hand, we've started to see more people move here from overseas, a bit of a recovery there. Again, these numbers are small, but it puts us almost back where net migration has been over the long term. The other thing that people should be looking at, if they are thinking about when might we see a recovery, I hate how you go on interest.co.nz and there's bloody ads everywhere, isn't there? I love going on here. Stop saying this ad. Not interested. Good. Don't show me that ad again. I've got an ad blocker, but they know how to bypass it, right? Anyway, where was I? Inventory. That's a very important thing to look at in terms of how many weeks worth of stock do we have on the market. If you want to get this data yourself, you can get it from interest.co.nz. And what we can see is that we're at about 22 weeks of inventory in New Zealand. Of course, we had this massive spike post-COVID when we've been going through our downturn. We did get up at the worst point to 31 weeks of inventory. That was when we were in the midst of like a kind of mini downturn. But once we start to see the weeks worth of inventory, so the number of weeks that if a property didn't come onto the market, look at that bloody ad, Andrew, it's come back up. Close. No, the people need to know how much I hate ads. So if a single property, why are you laughing at that? Stop saying this ad. Send feedback. Not interested. So if we didn't see another, sorry, for anybody on the podcast, what's happening here is this bloody ad keeps coming up, and I hate it. I hate it. And what we've seen is that even if another property didn't be or wasn't listed on the market, over the we're going to ignore it now, Andrew. Wasn't listed on the market, then it would take 22 weeks before you ran out of properties. Now, if we start to see that drop, which could either mean that there are fewer listings on the market or that we're seeing even more properties being purchased, then if you see that drop, that would be a sign that we might start to go into more of a recovery period. And I think that's what we can look at.
Yeah, and I kind of think I've been talking to a lot of investors just doing annual reviews at the moment. Just it's a good time of year for people to kind of take stock in what they've got at the moment. And I think there are a lot of people that are feeling a bit more positive about the green shoots of the economic recovery and, well, the housing recovery. It's early days, don't get me wrong. Like, you don't need to run out there and buy something today because the market's going to take off. But it's certainly, there are more positive things than negative things at the moment. And we just have to get through some of this uncertainty.
So now you know if booming Australian house prices could spread across to New Zealand, but there's one more factor that's coming for the Kiwi property market, which is our November election. Now, I've analysed 11 elections going back 33 years, and in this video, I break down what the property market always does before the election. Click the video on screen and watch it now.